Hey guys, a very warm welcome to another video of my portfolio review. So guys, it's been almost 6 months now that I have been investing, and this is my portfolio review number 3. So very excited to talk about my portfolio today. So before I get started, I always like to talk about three major number, which every investor is excited about whenever there is a portfolio review. So number one, as you can see on the screen, is the total portfolio worth. So today I have invested around 22,000. So this is a great, like it's keep increasing. I think in the last video I had about 20 grand. Now it's 22. So just keep hustling, keep hard working, keep investing. So we are about now 22,000. This is great. And the passive income that I am at is $133 monthly. So this is also, we're gonna deep down into the video that I think it was slightly more in the previous portfolio review. And this one is slightly decreased because I'm heading towards more to the growth ETFs than the income ETFs, which I'm 100% ready to show you that. So we'll be watching out that for. And the last one is how much total profit I have made. So what is the realized profit gain, guys? If I sell my all the ETFs today, how much profit I will make? So this is the profit I have made in 6 months, $1,241. So these are the three major number. Very excited to write now, deep down, and jump into this section. So, are you guys ready? All right, let's get started with the portfolio review in details. All right, so let's get started with our portfolio review in details. So, in the first section here, first I would like to show you the overview of my account. So like how much we are making, what's the worth, and then in the second section I would like to talk about my holdings, how it's been performing and stuff like that. All right, so the section number one is the account overview. So for those who are not aware, I have two accounts in the investing. One account is in the Wealthsimple and one is in the Questrade. And guys, again, this is all mix of TFSA, RRSP, and everything. Okay, so it's very difficult to show you each in and every one because I have in both, right? So that's why. All right. So the first number one is total invested. So today, I have invested around almost 25 grand. Uh, I think it has been increased by almost like 4K, since my last video. So that's the total invested, and this is the total value. So today value, that's where you see in the like thumbnail the 22,000. So this is the current value of my portfolio. Now you will be asking, hey, this guy have invested like 25K and he's only having 22. It doesn't make any sense, right? Because the reason is that I have a lot of cash sitting in my account, especially in the Wealthsimple. So I have around like $3,600 sitting in my balance. So I will be using that definitely in coming days. So what is the what happened, like this $3,500 was sitting in my Wealthsimple RRSP, uh, but I'm transferring this money to my Questrade account in RRSP because I want to purchase some USD ETFs, and Questrade definitely have much more advantage than Wealthsimple when it comes to RRSP. That's the reason I'm doing this transfer. So if you ask me, Wealthsimple is great for TFSA, Questrade is great for RRSP. So if you're just planning to hold like Canadian ETFs, like in Canadian dollar, like VFV or HXQ, something like that, then all you need Wealthsimple, whether you open RRSP or TFSA. But if you want to invest in like some USD ETF like HSC, SCHD, and then DGRO, VWO, and then triple Q, NASDAQ 100. So if you want to invest in the uh, these USD ETFs, then definitely you need RRSP account, and then I think Quested is better again if we use that conversion. So that's the plan for the cash. Just giving heads up. All right, let's talk about total capital, guys. So this is total capital means, like how much I'm making in capitals, right? If I sell everything, that kind of thing. So in Wealthsimple, I'm gaining about $700, and in the Questrade about $55. And this is the total dividends I have received so far in both of the accounts. So for about 464 and 29 in the Questrade. And this is the total profit. So you know how much I have made. Like remember in the start I was telling you I have made about $1,240. So this is the breakdown of in the each account. And this is the percentage, you can see like how much, my this is the new figures I have added, like how my Wealthsimple Quested count is performing. So this is performing 8% and this is performing 6%. Definitely, I have invested a lot of money recently. That's why this is overweighting. And I have only $1,000 in Quest rate. In a long time, I haven't invested. That's why it's just 8%. But I'm very happy with these results so far. And my monthly income is $132 coming from Wealthsimple. All the dividends are coming from Wealthsimple because in Quest Trade I have all the ETFs are growth ETF which does not pay dividend. That's the reason. So I'm at around $133 in the monthly passive income. All right. So that was the account overview. Now I would like to explain, my investing style, like how my holdings are performing. So basically, I have divided, my investing style into two categories. One is monthly income and one is growth. So my one of my goal is like to keep around 30% or around 40% of the money in the income, so that cash flows keep coming and investing that cash flow in the growth ETF. That's again one of my objective, and so far I'm very happy with the weightage. Once I invested this $3,000 in the Quest trade, definitely this gonna go to 70%. So next portfolio review you're gonna see some here small changes like about 70% here. So that's my investing style. And if we see like income versus growth, and this is also one of the thing I'm trying to learn, like which investing style are good. I think both are good, both have its own benefits. There's always discussion about, but like covered calls, like mostly I invest in income is covered calls. So I think they are great for for the bear market or for the income and everything. So far I don't see any side effect of that. I'm aware of the capital return that if you're gonna ask, but so far I think the dividend, the amount of dividend they pay, they already overlaps capital, so you don't need capital at all. All right, so in the income I have around $8,200, 37 of weightage. And as you can see I'm just making $60 in capital, right? So this is the guys one of the thing with the incomes ETFs, with covered calls ETF, you just don't make much money from the capital, but you make a lot of money from the dividends, $205. So overall my return is 265, and then my portfolio is returning about 4% from the 8,000. And the monthly income I'm receiving from the income ETFs are the $80. And very similar approach, totally opposite approach with the growth style. I have about like 1300 $13,600 around in the invested. It's about 62% weightage, and capital I'm making a lot of money in capitals, 271. In dividend is only $86. So that's the huge difference, guys, between these two styles. And definitely I'll be keeping my growth style to 70%. All right, so the total money I'm getting from the growth is 357, returning about 3% of the portfolio. And I'm making $51 from the growth. And the last option is cash, the like how much. There's an ETF called cash, which will return 5% of dividend and it doesn't lose any capital appreciation. So as you can see, this will stay almost similar and I'll be making money from the dividend, which is returning 8%, because I sold a lot of cash to buy other stuff. That's why it's just very high 8%. All right, so this is the overview of investing style. Now I want you to show you what ETFs I hold in income and what ETFs I hold in growth. So let me open up this income one. All right. So in the income here, that's the all the ETFs I have. So the GDV, the USCL, EIT, ZWC, ENCC. I'm not gonna repeat each and every name, but here you can see these are all the ETFs and I have. This is the how much money I have put in, the weightage, the capital, how much I'm losing or earning, and how much I made dividend so far. This is the total money I made from that specific ETF, and this is the percentage in your returning. And the last field, how much I'm making monthly money from that specific ETF or close-end fund. We'll talk about that. But let me show you my now the growth style. All right, here you go, my growth style ones. So you will see some of the very quality ETFs like HXQ, XIC, VFV, XIT, and all that jazz. So basically, these ETFs, appreciate you more in capital than dividends. One of the thing, maybe definitely I'll see in the comment section, I want to point out, like you will see some of the ETFs like, YTSL or YGOG. These are very difficult to place whether it's income or whether growth because they are paying around, like 8% of yield. Like if you will see on the YTSL, the income is very high. I decided to keep in here because these specific ETFs really do appreciate good in the capital. Like for example, if you see this Amazon and the Google one, the ETF, the covered call ETF, like I'm making $47 in the Amazon just from the $500 investor. And same goes to Google. Like I'm making basically 10% of money just from the capital. I'm not making much from the dividend at all. That's why I decided to place this ETFs in the growth area here. All right, so that's all with the section number one, the account overview and the investing overview. Now in the next part, I would like to explain you and I would like to show you what are some of the ETFs I have sold since my last portfolio review and what are I have bought as well. All right, so here you go. I have pulled up the all the stats. So firstly, I would like to go from the income and growth. So let me show you in the income what I have sold and what I have bought. So first of all, in the income, I have sold some of the split share fund like LBS, DK, DFN, and QQCC. So these three split share fund and this ETF, I have sold my old position. These three, again, the reason is I'm heading towards more to ETFs compared to split share fund. I have done some research and I feel like ETFs, covered call ETFs, are much more safer than split share fund covered calls, right? And one of the reason is because the dividends of ETFs are consistent uh, than the split share fund. So these are some of the reason. These four I have sold. Let me see if anything I've sold. Okay, one another thing I have done. So I have swapped my all the shares from HMAX to BKCL. So there are three new ETFs are introduced by Horizon. One is USCL and CNCL and BKCL. So these are the three ETFs they have introduced, and I have invested in all three. And what I have done, HMS is also, a great, but I was really high in the capital in the HMX. I was above like around 10%. Then I decided, okay, I'm going to sell the HMAX and then I'm going to buy the PKCL. Both are very similar in holding. And I will be doing very similar with all these, covered calls. If I ever notice, like I'm making a lot of money in the capital, I'll be selling those and then I'll be buying alternate ETFs. The reason being, the covered calls ETFs are are not designed to gain money from the capital. Even if you make a lot of money, that means that market is very up, right? So is it better to get that capital and invest in the alternative, so you can get both dividends and the capital, and also you can do the DCA down, right? We don't want to do the DCA up, especially in the covered call. So these are the few of the changes. Another last change I want to talk about in the income style here. I have sold all my shares of coal and then I have replaced with ZWK. This is the BMO one, and you can see here around $600 in the US bank. So I'm also up in. I was already up in coal. Now also I'm up in ZWK as well. And the reason being is, because US banks was 40% down when I buy, and they're slowly recovering. So maybe who knows? Maybe in a few weeks I'll be selling ZWK and then buying coal, right? Because I'm up. I'm super up in. Not. I won't say super, but I'm up in the capital. So this is one of my plan to make more money from the covered calls, in sell them when they are super high in capital, and then take that capital growth and then invest in the alternative one, so you can do DCA down. So we'll see how it works, but they just very transparent here with my plans. All right, so this is all I have done in the oh sorry, my Alexa is being a little bit here giving me trouble in my recording. So, oh, one thing I forget. Yeah. So another one is CNCL. So this is a great alternative for HDIV. So this is the Toronto, the TSX market. So the Canadian market. This is a covered called ETF, and I just invested like $300 in it here. And again, if I feel like I'm gonna keep only one HDIV or CNCL, so this is a great alternative for HDIV for the Canadian market. Okay, before I leave, even I wanna just also with transfer here my future plans. Okay, one of my future plans are in the income here. I will be definitely selling GDV. Okay, GDV is the last split share fund in my portfolio. I wanna sell that, and then I will divide the money in all of it. And then last one I want to sell is ZWC. Okay, because the yield is very less, about 8%, and I want to invest this $800, maybe divide all into others or the CNCL, because the yield is 12% of this one. So these are two on my radar. I'll be definitely selling those. And then I don't have any plans right now to purchase a new one, like a new ETF, but we'll see if a new opportunity comes. But QQCC is the one which I'm looking a little bit interested in. Initially, I sold it, because I have so much holding in the HXQ, which is the growth version of the NASDAQ 100, and QQCC is also NASDAQ 100. That's why I sold, because my weightage of NASDAQ 100 was way up. So I thought, okay, calm down and maybe just balance out. So these two and QQCC will be on my radar. All right, lot of discussion on income. Let's move to the growth version of it. So in the growth, let me see what I have done. So I have purchased a new ETF called HTA. I have put around like $1,100. So this ETF are like this is the top 20 to 40 companies of technology like Salesforce, ServiceNow, and so on. Because I work in the IT, right? Big fan of IT company. That's why I decided to put around $1,000 here. So this is the one of the new ETF, but it's been not performing well. I'm 3% down, but it's totally fine. This is the this ETF, is very interesting. It not only gives you the growth, it also gives you the dividend about 8%. So we'll see in the future, but this is one of the new ETF I have. And then the second one is the YTSL. You guys already know. I have sold the YTSL share when I was like 40% up, and now Tesla was down like about 10 to 15% in last month. So I decided, why not? to get started with YTSL again with Tesla being down. So that's the another one. XIC is the another one. That's like total stock market of Canada. So I already have XEI, which is top dividend companies, but this is the like total Canada stock market. So I thought it's really good idea to have this one to cover the whole market, and just 4% of the weightage and around 800 money invested in this. And the last two one I have in the growth one is the VEE, which is the focus on Asia market, especially on Chinese market, China market, and some of the top companies are like Alibaba, Tencent, all those top Chinese companies, Taiwan manufacturing one. So I think yeah, just good idea to have some diversification in international market as well. And the second one is VIU, which is the again cover the whole giants of international market, not only in Asia but all over the world, like Europe, Asia, maybe Middle East, so that kind of. So I have the exposure of both of these. I mean, VIU definitely is much better than VEE, but like Alibaba is down, Tencent is down, so I thought not a bad idea to get started with these two. So now let's talk about swaps. So I have done two swaps. So remember, I used to have VDY. I have sold all the share and then put my all the money back to XEI. Now the reason being, see, there's not no one is like good or bad in VDY or XEI. Both are great. But one of the reason, I'm trying to reduce the number of overlapping in the ETFs. When something is down, like for example, the Canadian market is down, right? VDY and XEI are both down. For me, it's so difficult to do all the DCA. Like I want to bring the average cost down. I have to put double money, right? So what my plan is just to hold one ETF, and is easier for me to bring that average cost down if specific market is any down. So that's also plan for future. I don't want to have like two ETFs. Like for example, I have two ETFs, VFV and ZSP. These are both S&P 500, one from BMO and one from Vanguard. So in the future, I'll be selling one and putting all my money into the other one, because again, if US market goes 20% down in the future, for me, I need a lot of money to bring the DCA down, and I'm a big fan of the DCA, right? Dollar cost average. So that's change number one. The second change I have done is I have sold all the share of TEC again. Top technology companies. Uh, I was comparing tech with HXQ like NASDAQ 100, and then what I noticed there wasn't much big difference in these two. So then again my plan was to reduce the number of ETFs. So then I sold all these and then invested my money in HXQ. By the way, HXQ is the top holding at the moment right now. Yes. And that's it. I think I have covered all the buy and sold, and also I covered for the future one is left. So guys, remember in the start I told you that this $3,000 I have in cash setting, I'll be buying HCHD and DGRO. So what are these ETF? These ETFs are focused on US company which provide consistent dividend and plus growth as well. Not only the share price growth but the dividend growth as well. These are very quality ETFs, and I'll be dividing the money into these two. I think HDSC I can also have one, maybe. I'm not sure at the moment. Maybe SCST is definitely my top choice. We'll see if we have enough money in the DGRO, but that's one of the plan for the growth here. And yeah, that's the plan. HCST I'll be buying in the RRSP of Questrade. So let me know if you guys have any question regarding my holding. Again, one of my plan is to do another video on the like growth versus income holding, so you guys can know what is the stickers are. Right? All right, now let's move over to the next section of our video. Very important analytic I'm sharing with you. Just one more left. Okay, we are almost there. All right. Now this is I have spent a lot of time here, and then I have created this chart for you that which indexes or which sector I'm interested in, what's my target in this, and what is my current holding, and what is my future targets. And I just wanna, oh, I also put ticker here so you can better understand, where I'm coming from. So, like, let me explain you just one of it, and then rest you'll get automatically. So, like S&P 500, right? In S&P 500, we have both ETFs. One is income style and one is growth style. And I have invested in both of them. Like I'm planning to target 70% in the growth and 30% in the income. So my target for the S&P 500 is 25%. My portfolio should be S&P 500. Right now it's only at 14% though. Okay, so we are still having that 11% remaining. So this is how like my future goals are. Like right now, like US dividend growth is zero because I am just started, right? So the one which a higher end number in positive are on my radar. These will be where you'll see most of the trades happen, incoming. So HCSD and the HYLD or the VFV or WU are on my radar because I'm really behind on them. And then yeah, Bristol, so these are all the top sectors and indexes like S&P 500, TSX, NASDAQ 100, US dividend growth, the technology companies, all in one ETFs, all cover North America, internationals, real estates, Canada Bank, US banks, and Canada Oil and Gas. So this is my target. This is where I'm current at, and this is the remaining. I'm just, when I created this, I was so happy that I can see my goals super clearly. So now I will just, this chart will be automatically updated. I have set up in such a way. And then, whenever I will be purchasing the ETFs, I'll be coming to this chart to see, okay, which one next I need to be focused on. Like, for example, technology companies, I'm way over my target. So, definitely, and the reason being, everything is down in the technology like Tesla, Apple, the Shopify, and the tech company. Everything is down. That's why I'm keep putting money in here, right? But once the tech companies are up, I'm gonna sell half of the share. Then the weightage will be controlled. Okay. The next one is I just want to show you the region wise, like where's my weightage is like. So I divided the category into three: US, Canada, international. So I'm very happy with this holding though. Like in the future, definitely I want to keep 60% here, maybe 30% here, and then 10% in the international. That's the plans. We'll see, because we never know which ETF will be on discount or sale, stuff like that. So let me know in the comments how do you like this breakdown. Like this is the favorite part of my portfolio review. Like I can get a lot of knowledge just from this snapshot. All right, so we are moving to the last analytic of our video of our portfolio. Let's begin with that. All right, guys. So this is the last, stats I want to show you. Again, one of my favorite. I usually come here every day and have a quick peek. What's happening, where I need to do my DC and stuff like that. So this is all my ETFs I have today, and this is the performance of my ETFs, how much weightage I have, how much money I have invested, what's the capital earnings on that, how much dividend so far I have received, what's the total gain on that, and the percentage like what's the money, how much money I'm making from it, what is the average return, and this is the monthly income I'm making. Like this is a really great, one of my favorite. I really advise to set up all these for you so you can have better idea what's going on with your portfolio. So like on Blossom more on YouTube, like people are saying always like covered calls are not good or stuff like that. I've been investing for 6 months and I can understand maybe at that time the market is down or up, but that's always happened. But if you see HYLD is my top performing ETF though. It's returning me about 13%. So this is a crazy stat for me to see. That's why, like, I don't think so the covered calls are bad, because as one of the good thing about covered calls, and the opposite about the growth ETFs, when you invest in the covered calls, as it doesn't appreciate you in the capital, you can invest the money and bring your DCA lower and lower. In the growth, your average price will be very low and the share price will be very high. So when you invest money in that, uh, your share price go up, right? So this is what I'm doing, that having. So these are also like Amazon, Google, I'm making about 10%, like, and then the cash, S&P 500, stuff like that. So you can pause the video and you can have a look here. So this is the results of 6 months. And then, yeah, only, I'm down in the tech companies, as I said, XIT, HT, both are tech ETF. And GDV, again, GDV is not bad. Uh, Definitely, I haven't received the dividend of this month. I'll be receiving on 15. Today is 13. So in 2 days, I think I will definitely cover up this $25. We'll see that. So this is the only one I'll be planning to sell. And ZWC, where's ZWC? I'm already 2% up. And then, yeah, definitely next couple of days I'm selling these and then putting all the money here. All right, so we have come to where we have started, and then I was very excited, to show you all this portfolio reveal. I really love to put all these small details. I show you like the different charts, like it's all over here. Like if I scroll down, like I just have set it in a such order. So I really love to do this deep down research, deep down this analytic to bring more knowledge to me what's happening in my portfolio. So let me know in the comment section. First of all, if you really like this portfolio review, please hit the like button. And if you really like my content, then you can also think of hitting subscribe button as well. But please let me know in the comment section. Do you really like this portfolio reveal, or it was too lengthy, too short, or you want me to cover some other areas as well? So yeah, we are done here, and thank you so much if you are still with me watching this video. I'll be very soon, and sorry guys, I was, I think 1 week late because of some personal reasons, but I'll be definitely back with another portfolio reveal on the next month, the first week of next month, when I receive my all the dividends. And then I'll be also, you gonna see more new content. I just, I've been very busy with my own work, which I work from, my other job. So definitely you'll be seeing a new content now very soon. All right, guys. Thank you so much, and then I will see you next time. Bye bye. Take care.
Hanging from the yard.